Welcome back to the program. Joining me right now is Steve Nwachukwu, who is an investment analyst. We're looking at the market outlook for the week. Hello, Steve, and welcome to the program.
Thanks for having me, and Happy New Year.
Happy New Year, too. Happy New Year to you. How was your 2021?
Well, 2021 wasn't that bad, and you wouldn't say it was also that rosy.
That bad how? Personally or monetary-wise?
Just, I'm looking at the market, and which
No,
also
I'm talking
has
about
to...
you.
Oh, personal. Wow, 2021. Well, it's like any other year that I've had since this coronavirus of 2020. It has been like you are locked down. You don't have too much activities, and most of the activities you find yourself doing it through Zooms. And in fact, your movements are all restricted, coupled with some level of insecurities that have also limited movement of individuals traveling to the hinterlands and all the rest. I think that's the experience for every other Nigerian.
I don't want to even get into all that because that's another ball game, you know. But let's get started. The market outlook for this week. The market started the year at least on a very good note. Or it started the year on a very good note.
Yes, yes.
2 weeks now it has traded.
Yes, I think about
bullish,
4.03%.
4.03%.
Yes, thereabout.
Last week 1.37%, and the upper week 2.66% or so.
Well, I think Januaries are always like that because it's in the sense that it's a earning season year. So people like 2021 have ended for so many quoted companies, and which I think 80 to 95% of quoted companies have their year-end January to December financial year. So this is the time investors actually take stocks and take positions of stock, because in next 1 to 2 weeks or 3 weeks, you start declaration of dividends. So it's always like that rush to take positions on some good equities, at least those who have a history of paying good dividends.
Okay, we'll come back to that. Let me note that down so that I don't forget. For companies that have good history of paying dividends, if you're watching, that is an indication of you, to you, to know the companies to invest in.
Exactly.
You know, but let's take a look at last week's market. 1.37% positive momentum for the NGX. Which stocks or what made the markets end in the positive territory?
I think I would say it's not a general perception for the market. Actually, individual stock that actually take the lead. Most of them in the industrial sector, some are in the banking sectors, actually make that market to have a leap of that 1.73% increase.
1.37.
Yes. What it means that the quotation or the listing of Abua Foods actually lifted that sector because it's also a high capitalized stock, having gained over 65% from the day of the listing. It was listed at 40 Naira and currently is selling above 66 Naira, meaning it has gained about 65%. So it actually, individual stock actually is moving, like Dangote Cement too, also contributed to the growth we've seen in the market with this new policy of buyback. So, you know, the company has been doing well. Some couple of good blue chip companies are actually doing well. Management-wise, I mean, decisions of the management. Dangote deciding to buy back its shares is a very good decision to reduce the number of that stock in float or in circulation. So when he buys back, he either destroys it or keeps it as a treasure stock. If he keeps it as a treasure stock, he can come back also to offer it, or he can also destroy it, and it's totally at reducing the number of shares in circulation.
Steve, just hold your fire a bit. I understand what you're saying, but I'm trying, I want you to explain the phenomenon behind share buybacks, because we saw what Dangote, you are trying to explain it now, but break it down.
Okay, it simply means that when you think you have an overbloated issued share capital, and then you decide as a management to reduce those issued share capital, or you also think that you want to, in a way of restructuring your shares or restructuring your existing shares, you can buy back your shares. It's part of the quotation or listing rules that you have the right to buy back your shares once you have the sufficient worth. What that implies is that any company that embarks on such kind of activity, it implies that it's actually rich enough that you have the financial muscle to buy back what you have. The exercise is going to cost Dangote Cement about billions of naira. The last time they did, they bought close to 100 and something billion. So this time it's still going to hit towards that end. If they buy up to 170 million units against selling close to 260 or 270 naira, depending the price they are coming to the market to assess the market. So you see the number of size of fund available to Dangote as a reserve they are using to buy back that share. So policy-wise is good. And also it also helps to reduce that very volume of shares in circulation.
Now, for those that are interested or want to understand the concept of this buyback, I know Dangote has put a date, I think January 19 and January 20. Yes.
Yeah.
How is it any Dangote shareholder, any shareholder of that Dangote cement?
Okay,
Dangote
yeah. To explain further.
Yeah,
perfectly perfectly.
So
it's not like they are selling.
Yes.
Actually, they are buying the existing shares in circulation. So if you're a shareholder of Dangote and you think that it's reasonable of you to offload the volumes you have, is an open window for you now.
So let's say you have 1,000 shares.
You have 1 million, you have 500,000, you have 10,000 units of share, and you want to reduce or you want to sell. The company is buying back that volume of shares in quotation. That is 170 million units they want to take out of the system. Have in mind that Dangote is the most capitalized stock in our market. It controls close to 25 or close to 30% of the market capitalization of the quoted companies. So it's actually the volume of shares it has against its selling price that actually makes it the leading stock in our nation's capital market. So
for the share buyback, it will happen on those 2 days at the current market price.
Yes, at the prevailing market price at the day of that 20th, and yes, immediately this news came in. Dangote was selling around 250 something, 253 to 256, and it jumped to 275. Exactly. So it was a good news, because even if it's at 300, they have taken the decision to buy. It's only what, and the fact is that the market has a circuit breaker at 10%, and it also has a maximum gain of 10% and maximum loss of 10%. So any day they hit the market, which is that 19th and 20th, whatever is given, whatever volume available that particular day, and at whatever prevailing price between 10% down and 10% up is the range of price that the management of Dangote must buy it. Between down 10 low or 10 up 10 up. So this is the range of prices they were going to buy.
And you know, the NSC then put that circuit breaker and put this kind of policy. Why? Because of this kind of things that happen. So
it's still part. We are a regulated market. Yes. We are a regulated market because we are a growing nation, and you should regulate some activities because the market is bourgeoisie in nature, or the capitalist in nature.
Some countries,
of course, because of share manipulation. So if you don't put such kind of measures, someone can come and wake up and cause the price to go 100% in a day. Although we see it happen in advanced countries, in the US, where the market is not regulated, in the sense that the price can go 100% in a day, it can also come down 100%. But they also have a circuit breaker for the entire market trading. If the market gains, the entire market gets to a particular percentage, the circuit breaker will be triggered. It's self-triggering. If it triggers, the market will halt for that period of time, 10, 20, 50, 1 hour, depending the jurisdiction. So it stopped trading for that moment, take a pause and come back and start trading. So the 10% is actually, like you said, to checkmate most of these crazy movements in prices of stock. So you can gain 10%, you can also gain 10%. Prior before now, it was 5%. Now we'll move it to 10% because the market is becoming more bullish, more activities and more volume of liquidity in the market. You cannot keep us at 5% because there are some good news that should drag a price of a stock over 10% in a trading day.
Over 5%.
Over 5% in a trading day. So it's good to keep it at 10% so that when such good news comes, you'll be able to take advantage of it. Just like what we saw in the Honeywell and flour mill. Such a merger is a very fantastic fundamental breakthrough for those who owns the shares of Honeywell. So in that case, you see the price of Honeywell going up 10% until it halted because of the EcoBank releases some funny articles just for the purpose of trying to get the balance payment of the loans that the Honeywell took from them and all that. But as it stands, at the face value of that very transaction of the merger or acquisition, is a very fantastic offer. Like we saw it, Olam buying over Dangote floor and delisting it from the market. Honeywell and the flour mill is a very fantastic merger and offer. Offer that costs Honeywell to cover out about 80 billion naira to buy about 71% of the majority shareholder, who is the owner of Honeywell. So it's really, really a fantastic.
Anyway, but there are a lot of intrigues in that too.
Definitely there will be. It's an industry that has existed for over 3 decades, a company you have run. You started the company you have run for such a period, and secondly, the same sector is booming. Is booming in the sense that it's a sector that on daily basis we consume this very item. We use the semo they produce, we use the spaghetti, we use whatever available wheat they produce and all that. It's a sector that is booming. That's why Olam has to buy over Dangote, and Dangote took that offer too, because I think that offer worth over 140 or 140 or thereabout billion that Dangote has to take the offer from Olam. Now, Flour Mill, which is a foreign company, is taking over a Nigerian company, which is Honeywell. Flour Mill is a foreign-owned, while Honeywell is a Nigerian-owned company, although having the whatever contribution from, because you cannot run a pastel and industry such as that if you don't have a collaboration with foreigners, because most of the equipment used, you need to hire them, you need to go in partnership with some of these institutions so that you can be able to be in business.
Okay, let's take a look at the way the market is really shaping up, at least in the last 2 weeks. That we've talked about Dangote's share buyback. There was also, there was also MTN. I think, was it before we went home for Christmas?
Yes,
I think
they did an offer.
Yes, to existing a rights issue, to existing.
Well, it's not a rights issue.
Yes,
it's not a rights issue.
No.
They sold what they have.
Yes.
Just like Dangote is buying what they have. It's a policy like MTN was listed not as a public offer. It was listed in a way of introduction. Just like we also listed Bua Food in form of introduction. What it simply means that you already have existing share as when you were incorporated with CAC. You know, when you got incorporated by CAC, you have quotation, you have fully paid shares and all that, and you've been doing your business as a private entity. Then the requisite or prerequisite condition to be listed is that you make available some certain volumes of your existing shares, which is about 20% over a period of time. So this is what actually MTN is doing. He did some when he was coming in through what you can call a sort of some corporate organization will come and you can allocate those volumes of shares to them. Now this time he's doing it to the entire public. I think about 560 million units they made available to the Nigerian public to
That's
be
575 million.
Yeah, 575 million
units. I think
units.
that's 169 naira.
Yeah, 169 naira. And currently it's selling above 180.
I'm trying to understand what you actually said earlier in terms of what MTN did.
Yes, what they did, they sold their existing shares.
Okay.
Like I said, the rule requires you to what we call it floating rule, as in what the volume of shares you should make available to the Nigerian public. Minimum of 20% should be available to the Nigerian public. Like I said, when you are incorporated, you already have existing share. It could just be one man that owns it, just like we have in Dangote or in Bua. All is 100% owned by, what's his name again, the chairman of Bua. Thank you. He owns 100%. So if you are to be quoted at the floor of Nigerian Stock Exchange, part of the rule is that you should make available 20% minimum to be owned by Nigeria. So NTN has been quoted. They should make available 20%. Out of that 20% is where they offer this very 575 million units. That was what actually happened. It wasn't a public offer. It wasn't
it wasn't a public offer.
A public offer is mostly when you are raising a new share. Just like you saw Dangote buying back his shares. It can keep it as a treasure share. It's still in existence, or it can totally delist it from the system.
Okay. with these happenings around the markets, at least around these companies, do you see more of it this year?
Yes, they are healthy. Like I said, there are a couple of decisions being taken by these institutions, just like Seplat did the other day, having a policy to pay a dividend every quarter. It's a very good policy, and this is what makes...
So that means investors will
Yes,
get
every shareholder of Seplat Energy will be receiving their dividend. Yes, 4 times a day, a year, meaning that if they make profit, they're going to pay. They're not going to hold it and keep it till the year end. Some will say because of accounting principle, but this is a principle or a rule by this management that, sorry, whatever be the rule, whatever be your accounting, whatever that we made this profit in this quarter, and we're going to share it among the shareholders. So these are healthy decisions. Such mergers we also expect. You saw what happened in Union Bank. A couple of such will be coming up.
Yeah.
It's such of buy and merger and the rest. We expect such. They are all healthy for the market. Once you merge, it means that you are pulling your strengths together to remain in existence. Just like what is going on with Honeywell and flour mill. It means that flour mill will now compete with Olam. Olam is the highest in the sector. I think Olam has about 12 metric tons capacity, which is about 35 or 40% of our industrial capacity to supply pasta, supply all that has to do with in that sector. So now, but these are the 2 major players. If this deal is consummated, I think in a couple of months to come, they'll be able to, because already the 2 big shots have taken decision and it's going on. Okay,
finally, in just 30 seconds, what do you expect for this week? Still a bullish trend? The bulls will hold sway, or the bears will rear its head in one form or the other?
Yeah, both are expected, both bears and bullish. So, 2 of them is depending on the numbers that will be coming out in weeks to come. If the numbers are heady enough, the bullish run will continue. But if the numbers are not that very fantastic, it will actually drag the bear to dominate the market. But I foresee that a bullish run will continue in the sense that we'll see in the 3rd quarter financial positions of these companies, and it's not going to be anything less of what they've done in their previous quarters. So we're going to expect a good dividend payout. Some of them that has, like I said earlier, very good history. Dividend payments. Dividend payment in the sense they pay a very good, reasonable dividend. Some pay 10%. In some banking first years of some first-year banks pay over 10%. Some pay 12%. Some pay 8%. So these are the things that will be drawn, and you cannot get that in the money market. That's why you will not seeing those of funds available in the money market will be start moving into capital market because they give a very good returns on investment. When you get over 10% or 8%, that's very fantastic for the year if you can get 10% in your investment.
Okay, I think we'll leave it at that. Steve, thank you for coming. I will talk sometime again soon. Of course, every Monday here we look at the markets and see how investors or would-be investors, or those that are interested in the stock market, can take advantage. So you continue to watch the show. We're not going to bring out everything in one show. I promise you that. So you've got to be watching the show every day. Thank you, Steve, for coming.
Thanks for having me.
All right, I've been speaking with Steve Nwachukwu, who is an investment analyst, and you've heard it from him, at least in the last few minutes. Let's quickly take a break. When we come back, the program continues. Do stay with us.